So guys, welcome back to my YouTube channel. In the previous video, we had learned about cryptocurrencies. If you haven't seen my previous video yet, check it out, link is in description. Now there has been a slump in the cryptocurrency market this month, with Bitcoin plunging almost 51% from its May high in a matter of 2 weeks. Now, this slump was caused by three major reasons. The first being China Banking Association warning its member banks of the risks involved in dealing with digital assets like cryptocurrencies. Second was Tesla no longer accepting Bitcoin payments for its cars. And third one was that the governments were planning of tightening the regulations for cryptocurrencies. In this video, we'll be looking in terms of supply and demand, how these three factors caused a slump in the cryptocurrency market, and in general, we'll be seeing how supply and demand affects the value of any financial asset. So if you're new to this channel, subscribe and hit the notification bell icon so that you don't miss any new videos from me. So let's dive in. So Bitcoin came down by 51% in a matter of 2 weeks because of three reasons: China Banking Association, then Tesla, and tighter regulations. So, how can three simple reasons, be behind such a slump in the cryptocurrency market? To understand this, we'll have to take a look at what is supply and what is demand. Okay, so now let's take a look at how supply and demand works. Suppose when Bitcoin started, they made available 15 million Bitcoins so that people can buy. Now, say for example, at this point in time, people have bought 10 million Bitcoins and they are not ready to sell them. So, in this case, the supply of Bitcoins is 15 million minus 10 million, which is 5 million Bitcoins. Now, suppose that tomorrow Elon Musk tweets that Tesla will start accepting Bitcoins again. Now, this is a positive sentiment and a reason for people to buy Bitcoins because the expectation would be that the price will rise. Now, seeing that, suppose people start buying Bitcoins and they place an order for 3 million Bitcoins. So, the demand now becomes 3 million Bitcoins and the supply is 5 million Bitcoins. So, the demand goes up from a minimum demand to a 60% demand. Now let's take a look at a diagram to understand how variations in the demand affect the prices. Now let's take a look at the stock market. Now imagine that the big tank represents supply and all the small tanks represent various institutions and retail investors buying and selling stocks, which is demand. These institutions include corporates, mutual funds, retail investors, government, FIIs, etc. Now, if two or three of these entities decide to sell all of their stock holdings, the stock market will go down, but the drop will not be very severe because a large number of entities are still trading stocks. Plus, since the stock market is regulated, there is less risk and there will be less panic selling. Now, consider the cryptocurrency market. Cryptocurrency is not accepted by a majority of previous entities, as it is neither regulated nor monitored. Major entities trading cryptocurrencies include Tesla, black money holders, money launderers, tax evaders, some institutions accepting cryptocurrency, retail traders, member banks of China Banking Association. So the slump in the cryptocurrency market was actually building up from a long time. So first the rumors about tightening up the regulations so that cryptocurrency can be monitored and controlled by the governments. So this fear of tightening up regulations actually made black money holders, money launderers, and tax evaders sell off their cryptocurrencies. The next factor was Tesla no longer accepting Bitcoin payments or any other cryptocurrency for that matter for the time being until a better cryptocurrency comes up. So Tesla went out of picture, and now member banks of China Banking Association, even they are not trading cryptocurrencies. So, in this scenario, only retail traders and some institutions accepting cryptocurrencies are left. So, now what happens is, like we have seen in the previous example, that the demand is 60% of the supply, and this demand actually decides the price of the cryptocurrency or the financial asset. So now, what happened here is, since Tesla, black money holders, money launderers, tax evaders, and member banks of China Banking Association left the picture, the supply of cryptocurrency actually increased to a huge extent and the demand became less. So now, if when the supply is more and demand is less, the price drops. Say for example, out of the 10 million bitcoins in circulation, Tesla was trading 2 million bitcoins. Black money holders, money launderers, and tax evaders were trading 1 million bitcoins, and member banks of CBA were trading 2 million bitcoins. Now, when Tesla, illegal traders like black money holders, money launderers, and CBA exited the scene, the supply of bitcoins increased by 2 million plus 1 million plus 2 million, which equals 5 million bitcoins. Now, the total supply of bitcoins in the system is 5 million plus the previous 5 million, which is 10 million bitcoins. And the demand is still 3 million bitcoins because of those previous orders of 3 million bitcoins. So from the previous 60% demand, the demand now reduces to only 30%. At any point in time, supply is the number of units up for sale and demand is the number of units up for buying. Now, when the demand reduces, it means the value of the financial asset has also reduced and the price falls. In the case of cryptocurrencies, a majority of traders of cryptocurrencies fled the scene because of these three factors, which led to such an increase in supply versus the demand that the price drop was very significant. Now, these kinds of situations don't affect the stock market in such a big way because the number of entities trading equity shares is very huge, and two or three players exiting the stock market scene doesn't impact the price of stock markets in such a big way. So this is how supply and demand affects the market price of any financial instrument or financial asset, and this is how those three factors cause such a huge change in the supply to demand ratio that the prices of the cryptocurrencies started to plummet. So what should cryptocurrency founders or promoters do to contain this fall in the cryptocurrency prices? One is creative, a kind of a positive sentiment towards the cryptocurrency or some positive news to the cryptocurrency so that people stop panic selling the cryptocurrencies. And second important thing is they should contain the supply of the cryptocurrencies. They can do this by either buying back the cryptocurrencies from the exchange so that the supply decreases in sync with the demand, and the other is they should promote the cryptocurrencies in such a way that the buying actually increases. So that was how supply and demand affects the prices of any financial instrument, and how supply and demand is very fundamental to any financial asset or financial instrument. So if you like the video, hit the like button, subscribe to my channel and hit the notification bell icon, and we'll see you in the next video.